Is it time to buy into the Lemonade IPO stock, or is it already too sweet and you should stay away? We got that coming up. My name's Mike Bernard. I am the host of the Wise Money Show. I'm also one of the CFPs right here at Korhorn Financial Group. If you're new to this channel, hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, the lemonade stand that is going crazy on Wall Street is a company called Lemonade. So here's the deal. They are the hottest initial public offering, IPO, of 2020. Why? Did they come up with the vaccine or the cure for the coronavirus? No. They're an insurance company, a fully digital insurance company that touts artificial intelligence and a few other schematics to say, we've got a business plan that can last into the future. We're going to disrupt the industry. So what's happened? Well, they worked with their investment bankers and they did all the analysis, they did all the filings for the SEC and said, we are going to list on the public stock exchange, even though the business just started in 2016, we're going to list on the stock exchange, raise some money. So they did all the due diligence, and the valuation experts from the IPO, who again are incentivized to try to get that price up for the IPO as high as possible, they said, well, we think the price should be around $28 or so, in that range. And what's happened in its first day on the market? Yes, it debuted at around 28 and it went soaring from there, quickly up to $60, $70 yesterday, even traded up another 16%, finishing the day at $80 a share. That is unbelievable. Should you jump in? Should you jump in and get some of this sweet action from Lemonade? I'm gonna tell you, it's already too sour, guys. Lemonade is now trading at over $3 billion in valuation. Is that because they've got astounding profits and huge potential? Well, the potential might be there, but they're actually trading at $3.8 billion and now close to $4 billion in total value. That's a price to sales ratio of 56, not price to earnings, because there are no earnings. Last year, the company generated $67 million in revenue. That's it. And they lost $108 million. This company has no profits yet, and they're trading at $4 billion. The company's worth $4 billion. Even though any other insurance company, if it had only $67 million of revenue and lost $108 million, that company would be going bankrupt. And this company goes to Wall Street and gets valued at $4 billion. 56 times its sales, annual sales. That is incredible. So do you jump on or not? To me, guys, this is evidence that on Wall Street, thanks to the Fed and Congress stimulus action, and even yesterday, thanks to China just publishing, hey, you should buy the stock market, and the Chinese stock market went up 11% yesterday. This is all fueled by those, you can call it propaganda, to just push the stock market higher, and everyone has a high risk appetite right now. Should you? Should you have a high risk appetite? Is Lemonade actually worth $4 billion? It could be, guys. It could be. Today, as of right now, it is not. It is not. The stock market has priced it way ahead of where it is today, its present value. But could it, through artificial intelligence and everything else in its business plan, could it someday really justify being worth $4 billion? Possibly. I still don't know the future. Right now, it's how much risk do you want to take today? How much risk do you want to take today? I saw an article by an analyst yesterday who said, back in the late 90s, all companies needed to do was put a .com in their name and their IPO was going to go soaring. Today, all they need to do is say, we've got artificial intelligence and we're a fully online platform, and the IPO is going to go gangbusters. I hope history doesn't repeat itself here, and that we see that the tide goes out, we see who's wearing a swimsuit, and listen, if you're not a profitable company, you're actually not worth that much. I hope that doesn't happen, but it might. And because it might, the question is, how much risk do you want to have? There's high risk right now with this IPO already being bid up from $28 per share up to $80 a share. Guys, I would watch out. I would stay away. As always, your overall investment approach needs to be a disciplined process that fits with your overall financial plan. That keeps you away from these potential distractions, these high risk, potentially high reward temptations like a Lemonade IPO. So make sure you're working with your certified financial planner, that you've got a great overall investment strategy that fits with your long-term retirement and financial plan. You need a second opinion? We're always here to help. You can find us online, corehorn.com, or give us a call, 574-247-5898. All right, you're now ready. Go out and take your next wise step in your financial life.